What is up, everybody? In this video, I'm going to answer a subscriber's question. Please do a video on trading metrics that every growing trader should track in their journal, irrespective if their trading software provides that or not. Thanks, heart emoji. All right, I will answer that, but I'm also going to tell you how I can't fucking answer that right now. And then I'll give you what the fuck you're looking for. So if you want to skip certain areas, link, I chapter these fucking videos. You can take a look. First and foremost, running trading communities for many years now, even if traders are trying to model what I'm doing, or they watch what I do, or they're always consuming my material, in the end, you're all doing your own fucking thing. Even traders that are doing what I'm doing, they're taking from me and creating their own identity. And that's ultimately how it's going to go for you. Your trading is going to be completely unique to who you are as an individual, your own strengths, your own weaknesses, and over time you'll develop an eye for the market to where you can see things that I simply can't see. Like, there's certain things other traders see that I just can't see, and I see things you guys can't see. And it is through repetitive, it is through watching my shit repetitively, case study after case study, trade after trade, that traders start to see what it is that I see. That's why I have my coffee. Obviously, I'm going to plug it because that's what makes this YouTube channel worth a shit, because the ad revenue is crap. So with those traders that are attempting to model my trading through the coffee, I can better provide metrics, what they should be doing. However, if you're not trying to trade ES and you're not trying to model me, and you're doing your own thing, which is damn near almost all of you, because that's what I've just noticed from having trading communities, is you guys do your own fucking thing. Say it again. It's really hard to tell you guys what you should be doing, because, or what metrics you should look at, because it's going to shit. I find coaching traders to be difficult because I don't understand your trading. I don't fucking understand what the fuck you guys are doing, and there might be some edge there or something, and if I don't understand it, I can't really tell you what you should do. Now, I have helped coach an equities trader in the past that was having sizing issues, and when it comes to non-specific edge, when it comes to like just general performance issues like psychology, that is a metric I can help you with. Or that's something where you can do what I'm doing specifically to break that barrier. However, when it comes to very specific things and price actions with specific indicators and all that shit, I really can't help, again, unless somebody is attempting to model me to the T to their best of their ability. So when it comes to trading metrics, the best thing that I think a new trader can do is I use Jigsaw trading. And if you want to save $30 with my affiliate, link in the description, but it's not to get access necessarily to the trading DOM itself. Jigsaw has a fantastic journaling software called Journal Analytics, or Journal Ticks is what I call it. I've been butchering it for fucking years. Didn't realize there was an A in there. I know how to trade, but I can't fucking read for shit or spell. So you can't be good at everything, folks. Anyways, this specific journaling software I really like, and there's other journal softwares where you can hashtag trades. So if you're going to attempt to track metrics on trades, I recommend hashtagging your trades. Now, I'll give you some hashtags that I think can be universally viable for all of you, no matter how you're trading, to kind of see where you need to make adjustments. Okay. So as far as like hashtagging things go, and these journal softwares, there's really generic things like, oh, on Mondays, Tuesdays, and Wednesdays I perform well, but Fridays I perform like shit. The last 3 Fridays, actually this Friday we actually did well, but the 2 Fridays before that we didn't do good. We were down. This Friday was starting to get a little rough. I'm recording this on Friday, but we managed to groove up. And I think general metrics like what days you perform the best or what hours you perform the best, I think that doesn't tell you shit. As far as metrics go, when you're analyzing your own trading and trying to improve in your own trading, you should have questions about your own trading. You should have questions to see if something does potentially have statistical edge. Like, for instance, my 3-year gap setup. That's where I first found edge. You can go watch this video if you want to know what that is. A lot of you aren't trading that, and a lot of you that do attempt to trade it aren't going to immediately get edge, because edge is not simply the setup, it is the skill set of this is a skill-based game. And I can only really speak from a scalper's perspective, a momentum scalper. I do get into holds, but it's a lot more rare, especially this year. It's just more so scalping is what's working. So I've really had to go back on that because really trying to get a trade to run, they come back so much. And I attempted multiple times today to get trades to run, and they just kept coming back, and then I got into trouble because of that. That had I just took out my momentum runs on it, today would have been an insane fucking day. So anyways, if you're not a scalper, the metrics you're going to use are just, the metrics I use may not apply to you. So edge really is, it's a combination of how well are you mastering your psychological self, your psychological monkey brain, or whatever the fuck. I don't know what I'm fucking saying. You get what I'm saying, right? Yeah, I'm fucking jumbling shit up. I think this video and this video are really worth a watch, because you need to really be like working on that. That's a metric you do need to track. And that's where it can be universal, where we all experience FOMO, whether we're scalpers or not. So that's something where I can give you like universal metrics. And again, like edge is really going to be you, and you're going to be able to make something work over time that if I tried it, I wouldn't. And that's also because of a lack of experience. There's really just absolutely no replacement for experience. If you've ever like skateboarded or done anything like that where you're trying to do a trick and land a trick, it is constant failure until you eventually start to get it. But you're going to fail at it more so than you're going to get it. And then over time, it transitions from I get it to not failing as much. So the same thing is going to happen in your trading, where when you're crafting your edge, you're going to be fucking it up a lot because you're a hand trader. And there's always so many nuances, and there are no patterns that are exactly the same. There's always these weird nuances in the trades, but it has a similar flavor. There is no do this exactly when that happens. It just doesn't fucking exist. And if it does, I don't know about it, and I have not seen it anywhere else. But anyways, over time, it's like that skateboard trick, you know, you're trying to do a kickflip. You're going to be fucking up on that a lot. So when you're gathering metrics on something you think have edge, you also need to be gathering metrics on how badly are you fucking it up, because the metrics you gather on that thing you think have edge, that data set is going to be incredibly fucking skewed if you're fucking it up real bad. So you need to be able to parse through that shit and figure out if there is edge, if you're able to dial in your trading and kind of perfect it. Are you getting in too early? Are you getting in too late? Are you getting in on time? You have to really dial that in. So I would say that's one of the first things you can track that's universal. In journal ticks, you have to use hashtags, and then they have this thing called Profit Seeker, and it shows a pie chart, and you can kind of like see how profitable, like how many trades you're taking with this hashtag set. You can see how much money it's making, how much it's losing. You know, it's just shit like that. And you got to really dive into that shit. Like, you need to be really good at picking the data apart. However, before we go on to this first hashtag set, I do want to say that you should be having questions in your trading, and whatever those questions are where you think there may or may not be edge, create a hashtag set for it. I'll expand more on this here in a moment or a little bit later. Let's look at the first deal. So you want to know if you're like, I would start to grade your entries. Okay, let's say you think you have edge, right? The first thing I would actually do, the first thing we would want to do is like hashtag maybe whatever you want it to do on time. So you can put on time. Now, don't space it. It's very particular. Don't use characters or numbers with journal ticks because it'll be all fucked up. You have to use words and don't space it. So on time. We got late, right? And then hashtag early. So I recommend binding this shit to a hotkey of some sorts, so that way you don't have to keep writing it up. And I think when you first start off, like if you're tick drilling or some shit like that, or whatever you're trading, you're trying to trade ranges or whatever it is, when you're reviewing your trades, which you should be recording your sessions, that's very important. Record your sessions, and this video shows you how to timestamp your sessions so you can quickly go through the trades. And I highly recommend you use a microphone and talk yourself through your trades, because that's going to allow you to get specific trading metrics that you can't simply visualize, because you may say something, or you may lack confidence in your voice, or you may hear that you're tilted, and you know that is going to skew your data. So you need to pay attention to that shit. So recording the session and your voice, that is very important. We're going to expand on the voice thing a little bit later. Anyways, like, are you getting in on time? Are you getting in late? Are you getting in early? If you're getting in like late, that means you're probably chasing the trade. You're FOMOing in. You're chasing it, because like there's going to be a sweet spot. And again, I'm going to be speaking from my trading, but this can apply to your trading. There should be a sweet spot to where you don't want to get in too early. You don't want to get in too late. You want to be in on time, or as close to on time as possible. Now, don't be making too many hashtags on your entry. You don't want to be measuring you don't want to measure like 5 different things. You know, you don't want like slightly on time, a little too early before on time. You don't want to add, you want to keep 3 things. And when you're reviewing your trades, there might be a trade where you're like, it might be late, but it might be on time. Just pick one, because over time, a high sample size is going to give you what you're looking for. So don't rack your brain too much on one if you're like stuck between the two. Like, oh, is it too early or is it on time? What do you think? Just pick one. All right. So don't make a hashtag that's between early and on time. You don't want to fucking do that, because then it's just too much. Just 3 things roughly. max, maybe 4, depending on what you're trying to measure. So now we're looking at our entries for every trade, and this is something a journal software can't spit out for you because it doesn't know if what you're doing is late or on time, right? Knowing what day of the week you perform well on is bullshit, in my opinion. You could just happen to be performing like shit because of some other external factor, and we need to know based off of the actual setups. So this can apply to everything. So if you're first getting in the tick drilling, you bought Jigsaw, and I think you get journal ticks the first year for free. You can start grading your entries and figure out where you need to tighten up, because ultimately trade management, you should be managing by hand, in my opinion. You shouldn't be putting on a hard stop or a hard target. And I want to actually read this comment. I don't want to throw this guy under the bus or anything, but and that's not my intentions with this. He says, so far I build my strategy around not messing with take profit or stop loss. So he puts on a hard target or hard stop loss. But yeah, that's being blind to what the price is doing in the meanwhile. So he puts on the trade, and then at that point, you just sit there. He says you really need to have your emotions in check. And what he's referring to is if you're going to actually manage this thing by hand once the trade is on, which I do. And there's reasons for that. And I've explained in other videos. The reason I never wanted to play with my trade after it's on, it's because I don't really trust myself. Fear, FOMO, greed. All that shit kicks in, and then you quit the trade, and it runs. It happens to be a good move, and it can just go. So you get out of the trade. So here's the thing. Trade management's never going to be perfect. There's going to be times where you cut a trade for whatever reason, and it goes without you. There's going to be times where you miss a good trade. There's no fixing that. There's just, you want to try your best to be as perfect on possible. However, you need to have baked in the contentment and your trading psychology to just be okay with missing shit. You cut it too early or what have you, and do your best to fix that for the next time and try to play a perfect game. However, you really got to have this level of contentment because it's going to happen. And it happens to me all the time, man. I'll have trades that'll completely come back. And it happened to me today. I did scale out a little bit, but it's like for how far it's gone, what I scaled out of it wasn't worth it. Never runs the target. I think more so in this current environment, they're going to mostly come back to you instead of running to target. But that's from my place of trading, which is pretty precision trading. But anyways, can I really trust my gut feeling like that? ? Well, I'm only a year into the game. I see the point of this, which is interesting. And that was on my Why You Should Scalp in 2024 video. See, that's the thing. This guy's putting on a trade, and he doesn't trust himself. I mean, that's the thing. He's putting on a trade, and he has to trust himself to put on this trade. And he's still going to feel these emotions. He's going to feel these emotions, or maybe he just looks away. I don't know. Some people do that. Some people put on a trade and just look away because they can't fucking handle looking at it. You're really fucking yourself by doing this. Because you have to practice and build the mental resilience, and if you can't face that, this isn't gonna work for you. So you have to rewire your brain to just handle it. See, and then if he's managing by hand, fear, FOMO, and greed all kick in. And the reason I manage by hand is because that can be the difference between green and red. Because most of the time, these bigger targets just don't fucking work. My first scale out points, a lot of the time, is all the trades are going to these days. And that just happens to be because we're bouncing between VIX 13, 14. that's the market regime we're in, and I don't really see it changing for a while. So we're just in an environment where that's how it is, and I just can't get shit to run like I used to. So managing by hand is the hardest thing. Like when you put the trade on and manage it, when you put the trade on and then you're managing it, that is trading. Everything else outside of that, there's nothing going on. Yeah, the context and the narrative you're building leading into the trade matters. However, once the trade is on, being able to really finesse that and consistently stay green, that's a skill set. I mean, that is no different than an athlete, like a basketball player, handling the ball. You know what I mean? Under the pressure of the game. It's one thing to throw the ball in the basket, which we all can do. You can probably throw a basketball in a basket. But under the pressure of playing in a professional environment with other people breathing down your neck, it becomes substantially more difficult. And the skill set, I mean, that's everything you're doing. The meditations, working on the psychology, everything is boiling down to you placing the trade and you getting out of the trade. And by those two simple actions, getting in and getting out, that right there is what everything you're working towards is going to ultimately boiling down to. Getting in and getting out. And that's the most difficult task of trading. Now, obviously, there's things that happen before it. Again, reading context, narrative, and finding the setup and hitting the setup. So you have to get your entry game on point, and then you have to get your exit game on point. So as far as the entry game goes, these hashtags, I think, are universal. Now, I think there could be a fourth hashtag for you guys. And journal ticks, you can use a playbook thing. That's not a hashtag. It's a whole nother category of labeling things. You can put impulsive. Okay. So if you have a trade that you know is impulsive, hashtag it impulsive and don't pair it with any other hashtags. Hashtag all your impulsive trades, because what's going to happen is your trading is going to look like this. Your trading is going to be you mostly losing. And what we want to do is see how many of these trades are like actually impulsive. And don't pair it with hashtags. You're going to be pairing other hashtags as a metric, so you can you can figure out if certain combinations work better with each other. But anyways, if you have a fuckload of impulsive trades, it can be really, I mean, you want to work as hard as you can not to be impulsive. The reason you're being impulsive is because of the psychological aspect. Most likely you're not being patient. I think any impulsive trade, at some point you're going to know it's just a shitty trade. It's most likely due to psychological errors, and that's why audio recording is an important metric, because we need to figure out if there's some sort of psychological shit going on so we can fix that part. Because remember in that one video, this one right here, I talk about how every trade is associated with an emotion, and when you put on the very first trade, you're associating it with a specific emotion. And in my opinion, anything impulsive is going to probably be a more emotional trade. You're not being patient because you're uncomfortable for whatever reason. There can be many reasons why it was impulsive. So we need to keep track of all those, because if we can, when you're new, you want to lop off as much of this shit as possible. If we can take off this chunk and make it smaller like that and get rid of what we just, that right there, you know what I mean? Or let's do this. See that little white line that you can barely see right there? Let's do this. So if this is like impulsive trades, if we can lop off this red chunk, that's good. as a new trader, a lot of what you're going to be doing is like hacking off garbage. So you're not going to be consistent. You're not going to be green, but you're just hacking off red chunks because you're going to be taking on way more losses than wins. That's just what's going to happen. So where can we cut off huge chunks of red so we can get closer to the screen? Now, in order to grow the green section, we want to be hitting things more so on time. And the more precise you are on entry, the more risk you're taking off the table. This is why this metric is so important. Because if we're getting into trades on time, if we're getting in them like too late, that can turn into a losing trade. If we're getting in them too early, it may not even be completely set up yet. And that can turn into paper cuts. If you keep getting in too early, they can start to turn into paper cuts. So getting in too late and too early can also be losses. And if we can be on time as much as possible, now we took off another chunk. And you can see how we're getting closer and closer to the green, which is ideally what we want to do. Now, if we're starting to nail trades and we're getting in them on time more often than not, then the green section will go up a little bit. So still red overall because there's other things we need to work on. But as you can see, if we know we're getting into trades and we're getting into them on time as perfectly as possible, it's not gonna happen, but we want to strive for that. Kind of like the skateboard trick. Just because you can do a kickflip more than not, you're still gonna once in a while fuck it up at some point. It's just gonna happen. You could have an off day. You know what I'm saying? So those are some very important metrics. Now, these hashtags alone aren't going to tell you if you have edge. This is assuming you found something you think has edge. Okay, so let's say you found something that has edge. You want to track that, and Journaltics has a playbook category, which isn't a hashtag, so you can playbook the setup. Like I have the gap jump, I got PVAs, I got pressure points. So those are the names of specific trades, or like medium ranges, micro ranges, shit like that I might be leaning on. So we want to see if a specific setup has edge. And then in order to see if that setup has edge, we need to be hitting it on time as much as possible, because that's also going to boost the expected value of the setup or the green section. So another metric I think you could use is going to be mean reversions. We trade in an environment where it ranges all the time. I use 3-second charts. I mean, I would go watch this video because this is exactly like this. This happens in my trading a ton. This is such an important video for my trading. Anyways, no matter what time frame you guys are on, you guys are all dealing with ranges. Every trader deals with a range. If you're trading futures, you're dealing with ranges. You're dealing with ranges. Now, even if you might be just a straight up breakout trader, but you're still dealing with the top of a range. Unless you just buy breakouts or sell breakdowns after it's already moving, and that's all you do, then this probably won't apply. But I don't think that's most of you. I think most of you are dealing with ranges on your time frame no matter what. Because even on trend days, there's micro ranges, and the markets are fractal. So one thing you can do is, are you trying to trade, let's say we have a range right here. Let me just draw it. Are you trying to go long up here? Are you trying to go short down here? So if that's the case, then this would be hashtag mean break, because it's a mean reversion or a mean break. Remember, you on journal ticks you can't have spaces. Or are you trying to long from the bottom of the range up and short from the top side down? If so, that would be mean favor, or whatever you guys want to do. Mean reversion, mean favor. Chances are, again, you're all dealing with, I used mean favor. Chances are, though, you're all dealing with means or ranges. So therefore, since you're dealing with ranges on price charts, unless some of you guys are dealing with something weird like a Renko bar or just pure footprints or some shit, then that might be tough to do. But most of you are probably using bars or candles. If time-based, which I recommend, you can use these metrics. Or are you trying to play the middle? So anywhere here, it doesn't matter if you're long in it or short in it. You can hashtag it mean mid for like middle, mean mid. So 3 metrics right there for you. For me, there was a substantial amount of edge in mean reversions or mean favor trades, substantial. And the other 2 hashtags, mean mid and mean break, I just lost money on. So that's why ranges, micro ranges, for those of you that are part of the coffee, that's like, why is that so big and important for you, Fat Cat? Why are you always trying to leverage some sort of micro range to mean revert back in? It's because there's a lot of statistical edge from my trading, and I'm not gonna say I bet. I don't want to do that, but I'm pretty certain that if you guys track this, you may get the same results. Now, obviously, you want to use the other statistics because you want to make sure you're getting in perfectly. And just because you're fading a range back in doesn't mean it's not necessarily going to fucking work out, because there's a lot of other things going on in finesse to make my mean favor hashtags more profitable by using other context and stuff. But as a developing new trader, you're starting out, track this one, because chances are you're dealing with ranges, and see where over a couple hundred trades, you should start to see if maybe there's some edge there, and then you can like really dial it in with your entry tags. The next metric you can use is exits. All right. So exit good. Exit late. So you want to, is your exit late, right? That means it could be coming back or some shit. Most likely an exit late would be it's coming back or some shit like that. Exit early. If you know you need to hold the trade, see, I told you I can't spell. If you know you need to hold the trade and you keep getting exit earlys, well, you'll know. Now, another hashtag you can do, like, I mean, if you want to know if your setups are mostly running to target, you can run different tags like target hit. I don't do this, but these are just ideas. Target short, meaning it never hit target. Or you can do like target overshoot. So did it hit the target? Did it roll under the target? And is it going past the target? And you want to see if like It's up to you. I mean, at some point this could be too much for you guys, but is the target actually being hit most of the time, or is it falling short most of the time? For me, the ultimate target falls short. So I need to be more aggressive at getting out. Now, if you notice your target overall is overshooting most of the time, then you need to be holding more. So that's a metric that can help you figure out if you need it, but that's assuming you got like edge to begin with, right? Or you think you have edge somewhere, like, is the trade keep coming back on top of you? And you just need to have questions about your fucking trading, and you want to like put up these guardrails, collect a bunch of sample size, and see where the edge potentially is. Now, it's going to shift with regime shifts. Like if VIX gets real high, things are going to change. But in my opinion, at least a lot of what I do still works. It's just like I have to make slight adjustments, but what I do works across all regimes. It's just I have to make these adjustments. Like my mental clock has to maybe get longer or shorter if the volatility picks up. Shit like that. I mean, at some point, like you're building upon the system, these metrics. So it's just at some point it's like completely unique to you. This stuff becomes very unique to your own trading, and you're gonna be tracking metrics that have like I've never tracked that really I don't need to because it may only relate to your system. Maybe you're tracking like a MACD or some bullshit like that, But as far as exits go, I mean, is the exit good? Is the exit late? Is the exit early? And that's if you're new. You want to know, like, I mean, are you like if you're getting out really early a lot, but again, is the target being hit? You know what I'm saying? If you panic out a lot, well, then clearly there's a psychological issue there where you're just panicking out. So you need to fix that. And that's what I've been saying this, man, is like you got to get your psychological game under control. And these hashtags and recording your voice is going to help you identify that shit. Is the exit late? That means it's coming back. If trades are mostly coming back on top of you, I hear a fucking cat and heat in front of my front door right now, and that shit's not cool. If the trades are mostly coming back to you, that's not good either. You need to be scaling. You can't be letting trades come back on top of you. You just can't. Because every time you get into a trade, you're taking on risk. And if a trade works in your favor, the next 3 attempts may not work at all. So you need to, like, in my opinion, cash flow or do something to get a chunk of that trade off. So if it comes back on top of you and it never ran the target, you got a little something out of it. Because there can be times where you're getting in the trades and they're not working back to back, and you get a trade and it works and then it comes back on top of you. That can be bad because you may need that to fix problems. I talk about the bankroll management video, which, not to make a complex topic even more complex, but I mean, this job is complex. So you want to try getting perfect entries, in my opinion, is going to be, for me personally, I have a lot more dialed in and honed in versus really solid exits, because this market really can pull some tomfoolery. I don't track that. I don't track exits. I'm more gung-ho about nailing perfect entries on good setups that aren't impulsive. However, for you, this may be important. So for me, if I can get a good entry on a good setup that's not impulsive, and I manage it well on the back end, or do my best managing, I'm typically going to always come out on top. So those are metrics you can use. And then finally, one you can use that yielded me substantial edge was multiple factors of support. Multiple factors of support. Are there other things like correlated markets or technical indicators or anything else to aid your trading decision? Are there multiple time frames agreeing? Are there multiple factors of support? In my opinion, and for me, when I tracked this, it was substantially huge for me that I started to realize that I can only be all I need to do, and I can only be taking multiple factors of support trades. Like anything outside of that, no, because this yielded a huge result for me. So you can do it like you can do multiple factors of support and then you can exit. And I'm not sure if numbers work in journal ticks. I said they didn't. They might. You'd have to test it because there's a certain feature where it gets wonky. So you can have like multiple factors of support. 1, 2, 3, so on and so forth. And at some point, is having more multiple factors of support going to yield a better trade? And in my opinion, yeah. But where is that cutoff? Like maybe I'm consistent with like 2, but not 1, right? That's where the cutoff point will be. Or maybe I'm consistent with 3. I'm consistent with anything higher than 3, right? But 2 or less, it ain't even worth a shit. But again, this is all going to be skewed based off your entry criteria. So you can pair the hashtags and see if you're getting good entries, and then you can parse through that data and just only look at good entries, good exits, and multiple factors of support. And then that's where you're going to need to dial in your trade management, the entries and exits, and then you can start to make that green bar I showed you even more green by really trying to make sure I'm only taking setups with multiple factors of support. I'm trading into the mean. You can trade into the mean and you don't have multiple factors of support. For me, if I trade into the mean and I have a shitload of support, it's better. If my entry is perfect, it takes a lot of risk off the table, which takes the red down. And if I get in good, I have a chance of getting a free peak. And if I manage it well, it boosts the green bar. So the first thing you want to do is lop off a fuckload of that red like I showed you earlier. And then once you start to figure it out, you got to really, it's this fine balancing act. And it's like you're on a tightrope and you're just walking the Grand Canyon, and the management's never quite perfect. It never will be, but you don't want to be super wobbly. You want to be where you're just barely deviating. And that's basically where you're going to live as a trader. So it's never going to be perfect, the management, but you need to dial it in as perfect as possible and strive for it. But again, you need to be content when things don't fucking work or you missed it, which will clearly blow you out. So Journal Ticks has these emojis like, how did you feel going into the trade? Shit like that. I recommend, and I have in like an old Zen series video where I talk about this shit. I'm going to look for it. I'll put it up here. This is it. But only after the fact. I don't know what it is in the moment, but since I've edited this, that's what it is. I recommend you maybe hashtag or do something where you can grade your psychology on each trade. So how did you feel on the trade? You know, it can be, I used emojis, so I would screenshot my fucking P&L, and then I would sort of just grade my emotions, and then I would go a step further and do a write-up on my emotions on each trade. But like, how did you feel? Were you felt good on the trade, or were you just like, I'm neutral? Which neutral's always good. Or did you feel like shit, something was kicking in, whatever? If you're FOMOing, that means you didn't feel good on the trade. Because we need to get our psychological game in check, because if you get your psychological game in check, you're not going to make impulsive trades. You're not going to be chasing. Like, that's going to get the other hashtags taken care of. So, like the too early or too late entry tags, if you get the psychological shit nailed in, because the chances of you're not getting in on time. Now, there can be times where it's difficult and you're getting in too early and you just had no fucking idea, right? But at some point, as you're dialing it in, and the more you trade whatever, the more you're going to start to realize when you are getting in too early or too late. The more that's starting to become a psychological thing. So if you're getting in too early and you know you're getting in too early, that's most likely a psychological thing. Obviously, if the trade is impulsive and you know it was impulsive, that's probably a psychological issue. If you're getting in way too late, it's probably FOMO. You're chasing it. At that point, you need to be content. So that's a different emotion. You just need to be content you missed it. So that's also a psychological issue. As far as exits go, that becomes a little more difficult, in my opinion, because, like, it really depends. If you know you need to be pushing trades and you're just cutting them too early, and they're working most of the time further, then that's a psychological issue, because there's some form of fear attached to holding it, or some sort of discomfort. Like, it's never the same. Like, FOMO isn't a one-size-fits-all thing. It could be a specific scenario in the actual price action. I really can't stress how important it is you guys go watch this video to understand what the fuck it is that I'm talking about. So, exits are going to be a little difficult. Sometimes you choke and you freeze up and you know you need to cut it, and it could be a hashtag exit late or whatever. If you're freezing up, that's a psychological issue. Also, you could track if you're fatigued or not. That for me is a big one this year. My shitty trading as of more in the recent months have been mostly due to fatigue. If you listen to Lance Breitstein, he talks about how fatigue, he went on a whole kick on sleep for some time. It is so incredibly important. So you want to maybe have something with, like, it's sleepy, with the Z's or whatever. Because if you're taking trades when you're fatigued, it doesn't matter how good of a trader you are. When you're fatigued in any performance sport, you're going to start to perform like shit, and you got to step out. I just really don't think you should be trading all day long. You guys need to stop doing that shit. I think you should trade the first 2 hours, or just 2 hours, and you're going to end up, when you first start doing this shit and you're really putting in the work to do this shit, a 2-hour session, 10 trades for somebody that's new, 10 trades could take you maybe 2 hours to fully review and then do other things with. So now we got to fix the psychological issues, which I talk about in this video. And again, you need to go watch this one here. So the psychological shit is going to have to be fixed in other ways. However, just knowing how you're feeling on each trade is so important. So when you're listening to your recording, what do you sound like? Because you'll know if you're pissed or not. Now you can track this on the hard right edge while you're trading, which I don't think is very easy. However, when you record yourself talking and it's after the fact, then you it's easier to figure out if you were how you were feeling and be brutally honest with it. Now, again, you may not be sure, so just try to guess. This is an important metric because if we don't get our psychological game in check, we can't tighten up the other hashtags like perfect entries and perfect exits and shit like that. Because this is just as much of a psychological game as it is a game where you need setups with edge, but setups with edge don't matter if the mental framework is not there. So fixing that is in those other videos. There's another one I recommend. This is probably the easiest way for you guys to do it, is to visualize and anchor emotions. Watch this fucking video too. Anchor and visualize certain feelings and relive your trading situations and relive it as if you did it with the ideal emotions. I take it a step further and I do hypnosis tracks for myself, which help really well. It's the same thing, it's just more in depth. I do have a trading client who is also been prescribed these hypnosis stuff with emotions. And honestly, when it comes down to coaching or helping other traders, I think this is where I can bring the best bang for the buck, because, and I'm not offering this publicly at this point in time, but I'm working with other traders and I've done traditional coaching, and I just feel maybe I can get more bang for the buck, and you don't spend as much time with me through getting the psychological game under control, which is universal, and I don't really need to fully comprehend what your fucking trading is to help you fix your emotions that are tied to your trading edge. And if that shit can get taken care of, then your trading edge should tighten up. Again, I'm do this shit for myself. It's a lot more extreme. Traders are like, I had one guy who asked me, how do I walk away? You have to visualize it. You have to visualize. This is why the review process is going to take fucking forever. So you have to really love all of this, and then trading is sort of secondary, because that's how you're going to get good at it. Everybody wants to be a trader until they have to do trader work. So really visualizing and associating emotions. You can learn how to self-hypnotize yourself. You can learn how to put yourself in trances. You can do all that shit, but that type of material is not found in the trading world. You have to explore other communities on YouTube, and then you need to take that and apply it to trading. Because for me, this has been one of the biggest psychological fuck yous I've ever embarked on. And I see that with other retail traders. And my opinions on why the trading failure rate is so high, I'm starting to really think it's the trading psychology. That's where I think it is. Anyways, guys, hopefully that helps. You want to really work on that part. I know I didn't spend that much time on the psychological aspect, but there are other videos I have on it. And with these emojis, we can figure out hopefully where we need to fix stuff. And when you're going into the next trading session, you want to take the lessons from the first session. So let me actually, so in this video, you can look at my daily report card so you can see other things in that specific episode, like easiest 600 of the day, what I learned from today, what I need to improve on. You really need to be going into the next session, and you really need to tighten up your trading as best as you can by learning from the prior session. And that's how you're going to see massive improvements and get better at this in a shorter amount of time. Otherwise, if you're not doing these things, you're just going to drag it on for years and years. I don't know why you want to do that, because I guess traders think they're missing opportunities by not trading the entire fucking day. But if you're trading the entire fucking day and you're not willing to do what it takes to improve what you're already doing in the first 2 hours or hour through some post-process shit and visualizations, then it doesn't matter. You're just wasting your fucking time. Like, the quality of practice really matters. You can practice something so much, but the conscious effort you put into it, like thinking about specific mechanics, if you're not doing any of that, if you're just trading and thinking about whatever, just nothing, or daydreaming about Lamborghinis, you're not going to get better. And if you do your review process and you're really not putting in the intentions to really attempt to take what you reviewed and apply it the next day, or work on your psychological game and work on your emotions, because most of the problems are going to be emotional once you start to find edge. And that's where traders really get stuck for fucking ever, and they don't know how to fix it. If you're not doing that, you're wasting your time in your review process. All right, guys, I'm done rambling. I hope you enjoyed it. I'm fucking tired. It's bedtime for me. I'm sleeping in. I mean, I always sleep in. But I'll see you in the next one.